Now, the Federal Reserve decided to raise interest rates by 25 basis points today. And the stock market rallied on that, and then it fell as Jerome started talking. What was interesting to me is that two regional banks, one is Western Alliance Bancorp, was down 30% today. Jim Cramer, of course, on April 19th says that is it just the best.
Dude, that's it. That's it. I got to invest everything opposite this guy. This is amazing.
That's why they have the inverse thing. And then you got PacW, Pac West Bancorp was down 54%. So I guess, and of course, a representative sold out of it perfectly and avoided all of the drops because that's what representatives do. Let's start off with VITALY. Any thoughts on these regional banks collapsing, and two more hit the dust after FRC, obviously after Silicon Valley Bank? Do you think there is a regional banking contagion in the United States, and should we be really worried about what's going on right now?
I don't know. Look, I didn't live through if you guys sort of remember this news, the 80s, there was an SNL crisis. I don't know if you remember that.
Yeah,
lots of banks, savings and loan. Lots of banks went bankrupt. The country survived. It still moved on. 2008, we had a massive banking crisis, right? We still moved on. I don't think these little banks mean anything. I mean, yes, it's gonna suck for the investors if they're not bailed out. Finally, investors aren't bailed out, thank God. But we saw the Fed is not going to let the little guy with a depositor not be bailed out. So that they are being bailed out. And doesn't matter how much money was $250,000, be damned. We're going, whatever you had, we're going to cover, basically, right? So I don't think this is an issue. Honestly, don't. And I'm sure more banks will fail because if Jerome is raising rates, he's making it hard for these banks. They're underwater, right? The mark to market, as we learned yesterday. So that's worse for these banks because now they have to get rid of these terrible deals they made for long-term, right? These long-term duration bonds that they have or whatever they're using. So my point is that they don't matter. So I don't know why we have to keep talking about these little banks. Tell me when JPM is going to suffer or Citibank.
Chris, do you agree that it doesn't matter these banks collapsing, and ultimately if the business goes to JPM, it's just not that big of a deal?
So there is definitely a contagion risk out there, and depends on which industry that these specific banks were heavily involved with. So as an example, some of the regional banks, they're heavy lenders to like commercial real estate, right? So what ends up happening is if you have a commercial real estate property that you got a loan from these guys, that the loan is not due right away. That's not how it works. Like you still have that loan, it just gets sold to another party. Now, when it gets sold to another party, that party is probably just going to hold that loan, collect the interest on it, and then when it comes time to refinance, they won't refinance. They'll just say, sorry, I'm not going to do it. So I think a lot of commercial real estate is in a very difficult position because a lot of them use these smaller regional banks in order to make the loans that they needed to buy up real estate. Now, there's two opportunities here. Number one, not every regional bank suffers from the same problems that these guys did. They don't have necessarily a lot of concentration risk, which these guys did, like FRC and Silicon Valley both had concentration risk in that a lot of their client bases were very wealthy people. And in Silicon Valley's case, mostly VC funds that were dropping money in there. I'm talking about like, these are like $1 million, $2 million, like accounts, or maybe even more actually. So when you look at other regional banks, something like the one that I'm doing a lot of due diligence in right now is Truist. Truist is a combination of, back in the day, SunTrust, which is all over the Southeast, and BB&T.
What's the ticker symbol, Chris?
Truist, I think it's let me see.
Let me type it in.
TCN or something. Yeah.
Okay, so you can keep going. I'll find it.
Yeah. So Truist is a combination of two different banks, but they mostly cater towards small businesses. And these small businesses, not like a few $100,000. Like you're talking about like a lot of small businesses. Like my brother uses Truist, because he owns a gas station. The thing is, they are very insulated against the risk of huge withdrawals at one time. Like they've just got pre-existing client relationships with these guys. They've built this over decades. So there isn't nearly the amount of like bank run risk that you're going to be running into with companies like Truist. But all the same, everyone right now is selling out of these regional banks, because everyone thinks, oh well, regional banks are dead. We should sell all regional banks. So I think this is where you can actually derive some good value. So if you're able to actually recognize some patterns, I haven't done full due diligence yet, so don't think that this is my way of saying you should be buying Truist. All right, I'm just saying that among the shit, usually you're going to find real pieces of gold, and so you wanna look out for those pieces of gold, so that this
Well,
way,
you
when
didn't answer
things
the
do
question.
change,
You went straight to your bull thesis on
Mhm.
this little shitty
Yeah.
bank. The question was, Chris has a
Yeah.
way to just divert to a different topic, usually Weight Watchers, but in this case, it's the new bank that he's researching.
I'm sorry, not everyone wants to fucking buy microinverters. All right, let's go.
No, hold on. I'm
Yeah.
saying, but the question was, do you think these two banks or these couple of tiny banks going down, like, is there a cascade effect that's happening, or like we're gonna be fine? Like, the
That will
big
be
banks are
fine.
fine.
We'll be fine.
There's plenty of liquidity in the big banks. They're not going out of
Yeah.
business.
Yeah.
So what does it mean that a couple of small banks that made bad loans and have bad deals, what does that mean for
So
us?
so let's take one step back and say, first of all, they didn't make bad loans. Okay, bad loans is like 2008. That was bad loans. When you lend money to non-credible people, you're not going to see that money come back. That's not
Right.
They don't have the money to give it back to you. Okay, so just think of that as, hey, we fucked up. We gave the money to the wrong guy. We're not in that same situation. We're in a different kind of environment where they lent out money for too long at a too low of a rate.
Like
And
2%,
now,
basically, right?
yeah,
2%
Well,
for
two-
10
hold on,
years.
two-
If
3,
banks are
4%,
lending at
yeah.
2% and interest rates now are at 5.25, why does
Yeah.
that mean they collapse? What is the logic there?
Because if you mark to market, remember, if you're borrowing money at 5 and you're getting interest at 2 or 3%, you're losing money every single month. Now, where do you come up with the difference? The problem is, the reason why you're having these bank runs in the first place is because all the people that you borrowed money from, they're expecting a 5% return. A year ago, that wasn't the case. The expectation a year ago was literally almost no interest. Why? Because interest rates were super low. So if you were a depositor, you were getting nothing. Right now, Apple is giving you 4.25%. Why would I keep my money with you if you're not giving me interest and this other company is? If SoFi is giving me money, why wouldn't I put my money with SoFi? If I'm giving, so right now there's a competition for short-term capital, and same thing with money markets. Like, you can put your money in Robinhood, and Robinhood just bumped up their interest rate to like
4.65, baby.
Yeah. So why would you want to keep your money in a bank instead of keeping it in something like this that has way more insured?
So let me ask you, is the problem once again, because we talked about this maybe a month ago, is the problem once again that these tiny banks did not do any sort of swaps in order to hedge their risk? Is this the issue?
That's one of them, because it would have cut into their profitability, right? So that's one of the key things. The other thing is, no one in the history of the world could have predicted that the Fed would raise at the rate that they rose. Like, Jay Powell came out and said this is transitory. So they believed him and said, okay, we don't have to worry about it. Jay Powell said it's transitory.
That's true. When he said that, they believed him, right?
Yeah. So now they got fucked. They believed Jay Powell. And then Jay Powell said, hey, we're going to do multiple
listen,
raises.
when was the last time you believed a banker and didn't get fucked? Okay.
Yeah,
when was that?
exactly. Well, this is, it's funny that you say that, because I think the same thing's going to happen again. I think right now, Jay Powell came out and said, oh, the banks are fine. Motherfucker, what? They're not fine? Doesn't look like they're fine to me. And then there's bullshit about,
I think he meant the banks we care about are fine.
Yeah.
I think that's what he meant.
The other thing that he said was, oh, we have no plans to cut rates. Motherfuckers already like schemed to cut rates by well, at least the bond market thinks that we're going to start to see rate cuts in probably like September, October, November, December, around that time.
Why do you think the bond market says that?
Because
it's increasing?
What's because the yields, the 10-year, everyone was buying up 10-year treasuries today. The yields on the 10-year was dropping. You didn't see that?
Well, I know I saw a drop today. 2 years at 3.9.
Yo, you didn't have an alert?
2 years at 3.3, 10 years at 3.9.
If you ever want to see what's going to happen in the future, watch the bond market. The bond market will tell you more. Yeah.
It's probably, look, I'm expecting massive rate drops. Maybe at the end of this year. I'm not saying it's happening immediately, but I think 2024 is going to be a good year. That's what I think.
Absolutely.
Especially this Christmas, this holidays. I think we're going to see something that'll be quite spectacular.
Yeah.
Okay. We got to move on to another topic, but before we
Wait,
do
wait,
that,
but
ladies and gentlemen,
one last thing. One last thing before you do
Damn it,
that.
killed it, but it's
The-
okay. Go ahead.
No, just to preface that, the chances of us going into some really deep shit this summer is still there. Okay. So, yes, we can see a massive recovery in the back half of this year and probably 2024. That does not mean in the short term, when the market is going crazy, we don't see a rundown of maybe 20%. That is a very big possibility. I would say 10% is likely, 20% is unlikely, but it's not off the table of markets crashing down when all of this shit is happening. Because if there is a contagion risk and things start to show up, we got problems. But that's where you just need to make sure that you're hedged and you have some liquidity on the side so you can buy up things on the cheap and then just ride them for the next 10 years when the bull market returns.
And if that
Sorry, go
happens,
ahead.
do you think that would be done by September-ish, but the summer would be a little painful?
You know, so just think of it this way. Do you want to be the Fed Reserve chairman who let 10 banks die on your watch? No. You know, he may seem like he doesn't give a shit, but he gives a
You
shit.
already let 5
Like,
banks die.
yeah, well, no, he's not gonna let more die, man. Otherwise, you're gonna have problems. I know that. I know a lot of people are thinking that this is not a pivot point, but dude, today was definitely a signal, especially the bond market was signaling that this was a pivot. There's no way in hell they're raising any further. This was definitely like the last raise. I think the market is going to adjust. Businesses are going to adjust to their new rate environment, and then we're going to start to see some cuts here and there. So.